Hello and welcome to Chapter 7. Today we're going to have a sort of a work together day where I introduce this chapter. We're going to go through a few PowerPoint slides and then we're going to pop over to the Flex Cam together and actually take out some paper and do some work together in the way of introducing Chapter 7. So the name of this chapter is Accounting Information Systems, and what we're going to be learning about today is specifically to look at the sort of broad-based concept of AIS, Accounting Information Systems, but most specifically, we're going to be digging into the use of special journals and understand what this concept means of a control account with subsidiary ledgers. So these aren't tough concepts, it's kind of tedious. So bear with me, we're just going to spend time with pen on paper today. So first off, the book wants us to take a little peek at what an AIS is and what the principles are and the components of it are. So the basic principles of an information system, it doesn't matter whether it's a management information system or a sustainability information system or an accounting information system. Basically, it's collecting and processing data and having some sort of repository for data. Well, and as we know now with big data and constantly gathering this voluminous amount of information, what do we do with it? How is it meaningful? So in order to design and manage an AIS, you have to have some sort of cost benefit relationship. In other words, how much does it cost me to get the data? And what benefit am I going to use it for? So in running my organization, is it helpful to have millions of pieces of real-time data about consumer behavior, or do I want to have snapshots of points in time? I've got to be able to know that the data comes from a controlled environment, again, that it's relevant in decision making. You can sort of see this pie chart. And again, these systems principles are for any type of information system within your organization. Obviously, we're moving pretty rapidly towards a paperless system where our accounting information system is compiling digitally, storing, and then we're utilizing and querying it using tools such as Tableau and Access, et cetera, to make sense of the data itself. So the next thing we're going to take a look at, you're going to probably, I guess I'll just have my book out, but you're going to want to get some blank paper out. If you've got printer paper, that's ideal because it doesn't have lines on it or anything that you're going to be able to kind of draw these journals on. So if you can find some paper, that would be great. And I'm going to keep just talking as we move forward. But as we get going, you're going to want to turn the tape off, turn the video off, and do some work on your own. So the first thing I want to talk about is why we have these special journals. So up until now, we've only been using this, right? Our general journal. The general journal has got, the date, the description, the debit, the credit. And we've been journalizing our transactions on there, posting to the ledger, running our financial statements. And it's like, what the heck, here we are in Chapter 7, and we're learning about all these other journals today. The reason we use all these other journals is because they're set up to do nothing but process one type of transaction over and over and over and over. So sales journals are used only for recording credit sales. So debit AR, credit sales. Cash receipts journal is used only when we debit cash. So we're bringing cash into our organization. Purchases journal is used only for purchasing inventory on account, right? So debit, inventory, credit, AP. And cash payments journal is only used when we credit cash. Otherwise, we still use our general journal, but you'll see there really isn't that many transactions left that don't fit into one of these four. The next kind of big concept that you need to understand is this concept of subsidiary ledgers and how that fits into a control account. So we've been using a control account of accounts receivable for 3 weeks now, 4 weeks now. And if you're a small organization, maybe at any point in time you have 4 or 5 clients that owe you money. But if you're a large international consulting firm, your AR might be 30,000 clients. Well, obviously, you're not going to be able to track all that in this one big account called AR. So you have something called an accounts receivable subsidiary ledger. And that is a backup that ties into the control account, but where you can track each individual client, right? So here's how much I charged them, here's how much they paid me, maybe here's how much the discount was, what have you. Same with accounts payable. If you only owe a few creditors, no big deal. You can track it all through your account called accounts payable. But if you owe money to 1,236 different vendors, you're not going to be able to track that without using an accounts payable subsidiary ledger. And so essentially, this is just a graphic showing here's all my clients. Information for each of them fit into my accounts receivable account that goes into my financial statements. Same with accounts payable. Here's the companies that I owe money to. So let's go ahead and take out some paper. And you're not going to love this, but nonetheless, we're going to do it. We're going to actually make these journals: sales journal, cash receipts journal, purchases journal, cash payments journal, and a general journal. And then partially with this lecture and partially with the next one, we're going to go through a problem in the book where you enter the transactions in these special journals that you've made. So the first one I want you to make, and I'm going to be doing it at the same time, looks like this. It's called a sales journal, and it's got 6 columns. And I want you to write down the column headings just like you see them here, okay? Date, account debited, invoice number, posting reference, accounts receivable debit, and sales credit. These are the transactions you're going to make over and over. And then the next one, cost of goods sold debit and inventory credit. And I'm going to go ahead and make that. While you do that, that is on page 261 of your book. So turn the tape off and literally physically make this journal. And I want to point out that anything that we enter in this column, we're debiting and crediting simultaneously. So you're debiting AR and crediting sales simultaneously. And you know from the last chapter that whenever we make a sale of merchandise, at the same time that we record that sale at the sales price, we have to record an expense called cost of goods sold. And we have to pull that amount out of our asset called inventory. So our sales journal, we're going to use to record the date, the name of the customer, because this amount is going to, or this column is going to tell us where to post to the subsidiary ledger, right? Remember that ledger that backs up and equals the control account of AR. Each client that owes you money, you're going to have to put this amount into the subsidiary ledger and then post the totals to the general ledger. And therefore the subsidiary ledger will equal the control account. So your sales journal, again, just to reinforce, what do we use it for? Only for sales of merchandise on account. Okay, that's it. Nothing more, nothing less. So again, here's the name of all my clients. Once I make all my entries during the month, right? It looks like I had 9 different sales on account. I total the amount up. So I sold a total of $2,150. And that's all in my accounts receivable. Well, who owes me that money? You can go and look at every single one of them in the subsidiary ledger. And then for the amount of sales, this was the cost of the merchandise. So my sales revenue was $2,150 and my cost of goods sold was $1,500. And at the end of the month, I'll be able to go into my subsidiary ledger and see that each of these people owe me money, each of these clients, and the balance of the AR controlling account in the general ledger will equal the accounts in the AR subsidiary ledger. So what happens if we have a sales return and allowance? We talked about that in chapter 5. So Ray Ball gets some merchandise and he's like, yeah, this wasn't what I ordered. Or it's not what I ordered. I have to debit sales returns and allowances, which if you remember is a contra revenue account with a debit balance, and I need to credit AR. But now that we know about subsidiary ledgers, I also have to put his name because I have to enter this $175 in the control account and also in the subsidiary ledger. And because there's no specific journal set up of the 4 that we're learning about, right? Sales, purchases, cash receipts, and cash payments. There's nothing set up specifically for this. This is getting made in the general journal. Okay, next journal, cash receipts. Cash receipts journals are used only when you're debiting cash. And there's lots of different things that can happen that you debit cash in your organization. So we're going to now go set up a cash receipts journal, just like we did with the sales journal. And it's, you can follow along with me. I'm going to go over to the FlexCam and we're going to do that together. There's lots of different kinds of cash receipts, like somebody that owes me money from AR pays me, or I make a sale for cash, or there's cash from some other source, like, I rent out my warehouse, or I sold a piece of equipment or something that's not in my normal course of business. So now let's take out our second piece of paper. Cash receipts journal. And there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 columns. And so let's set this up. And again, we're going to be working with some of these today. We're going to work through a couple problems and enter them in these different journals. And then the next lecture, we continue using these documents. So again, date, account credited. This could be either the name of somebody from AR that's paid you, or it could be an account in the general ledger. So for example, like I said, if I sold a piece of equipment or something, So it could be the name of a subsidiary from accounts receivable or an account from the general ledger. This is a short little column where you just can pencil in some sort of explanation. PR is posting reference. When I post either to the subsidiary ledger or to the general ledger, I reflect that in this column to show I've done that. And then, as we know, you wouldn't even be in this journal unless you're debiting cash. So that's our first column where there's going to be numbers. Okay, I'm debiting cash. Now, the next 5 columns are going to be things that happen repeatedly. So one of the things is if my accounts receivable pays me. So I would debit cash and I would pull the accounts receivable off of the books. Right, so AR would be credited. And we also know that from chapter 5 that oftentimes if people pay within the discount period, they're going to have a sales discount. So these 3 columns I would use every time somebody pays me an accounts receivable, an amount they owe me, and they're taking the discount. If it's outside of the discount period, then it would just use these 2 columns. Okay. Another thing that might happen repeatedly, so that I'm going to set up a column for it, is just sales revenue. Debit cash, credit sales, somebody has purchased something from me and paid me cash. Then there's a whole nother slew called of things that could happen, and it might not be the same thing over and over, just called other accounts. And if you use this column, you've got to tell me what it is here. That would be your general ledger account. So for example, if I lent somebody money, or no, I'm sorry, if I borrowed some money, I would debit cash payable, or I would debit cash and credit notes payable. I would write notes payable in here and then put the amount both debit to cash and credit to other accounts. So if you use this column, you have to tell me what it is over here. And the last column is going to be for if I'm making cash sales. I, at the same time, always know when I sell inventory, I've got a debit COGS and I've got a credit inventory. So this last column you would use if and only if you were making a sale on credit. Or I'm sorry, if you were making a sale for cash, because the cash receipts journal, again, is only when you're debiting cash. So when you look, so get your cash receipts journal all set up. When you look at the end of doing a cash receipts journal, you've got to total everything out and make sure that your debits equal your credits. That's called footing and cross footing. And you can see on that journal, the 3 debit columns were cash, sales discounts, and cost of goods sold. And the 4 credit columns were accounts receivable, sales, my other accounts, and inventory. And before I can post to the general ledger at the end of the month, I have to make sure that my cash receipts journal all tallies out. The next one we're going to learn about is a purchases journal. And if you remember, a purchases journal is only used for purchasing inventory on account. So debiting inventory and crediting AP. So we're going to go make our next journal. It's called a purchases journal. And that's got 9 columns. And I know this is tedious, but it's really, honestly, believe me, the only way to learn this. Otherwise, you're just going to look at all this and be like, okay. So let's set that up. Our columns, of course, is the date that the transaction occurred. What account am I using? And if you remember, when you're purchasing on account, you're using a control account, which is, of course, AP. And your subsidiary ledger is going to be your accounts payable vendors, the folks that you owe money to. Okay. Okay. This is purchasing inventory on account. So I want to know the date of the invoice and the terms. And the reason I want to know that, if you remember, if I have an invoice date and I pay within the 10 days or the 15 days or whatever the terms are, I'm going to get something called a purchase discount. So that's going to be important to record. This is my posting register. And again, if I'm in this journal, it's because I'm crediting accounts payable and I'm debiting inventory. I'm buying inventory on account. And then you can also use this for other accounts. So if I'm buying, for example, equipment on account or office supplies on account or a car on account, this is the same from the cash receipts journal. If you use this column, you've also got to tell me in here what it is that you're doing. So purchases, primarily for purchasing inventory on account, but also if there's something else you're buying and crediting accounts payable, you would use this journal. Same thing, because there's multiple columns. You've got a subsidiary ledger here. So I'm buying on account. I owe all these companies money. I want to make sure that my subsidiary ledgers that I posted into should equal my big account, accounts payable. The next journal is called a cash payments journal, and cash payments is just what it said. It's for whenever you're crediting cash. So I'm spending money, I'm paying off my accounts payable, or I'm buying something for cash. I'm buying, that's basically it. I'm paying off an accounts payable or I'm buying something for cash. And you can see that when I'm paying off my accounts payable, I've also got I've got to post to the subsidiary ledger as well as the general ledger. So let's go make our fourth journal. And then all we have left after this one is the general journal, which you already know how to do. So that's super easy. So our cash payments journal is also sometimes called a cash disbursements journal. And it's only used when we're crediting cash or reducing cash. So what do we need? Of course, we need to know the date of the transaction. What check number am I using to make the payment? Who am I paying? And this is going to go into my AP subsidiary ledger, right? So if I'm paying off my vendors, I've got to make sure that I not only enter the total, but that I put it in the subsidiary ledger. What account am I debiting? My posting reference. You would only be in this ledger, I'm sorry, in the special journal if you were crediting cash or writing a check. So we want a whole column set up for that. If I am paying off somebody that I have purchased merchandise from, I am going to credit cash. I am going to debit accounts payable. And if I'm taking a discount, if I've paid them within the discount period, that discount's going to go in here. And you know that from chapter 5, that's the journal entry we make if we're taking a purchase discount. And then this last column is for anything else, any other account that I need to debit. And then really the last journal, and this is, you've been using this over and over, so no big deal. Again, is a general journal, and so make one of these, please. While I'm talking about this, you're only going to use this if the transaction doesn't fit nice and neatly into one of the other journals, right? Purchases, cash receipts, cash payments, or sales. So like this was used for a sales returns and allowance we looked at earlier. So let's just go back here and then we're going to practice a couple of these. Let's go back here. Let's go to your book. Okay, so I've done all the journals. Let's go to your book, please. And we're going to look at some transactions, and then we're going to try and figure out which journal to use and practice posting a few of them or entering a few of them. And then on the next lecture, we're going to really utilize them pretty extensively. So obviously hold on to these. Okay, so we're working on P7-1A on page 280. And the name of the company is Church Company. They complete these transactions and events during March of the current year. And all of their credit sales are 210 net 30. So that means that if they make a sale on credit, if the customer pays within 10 days, they get a 2% discount. So the first transaction, I purchased $43,600 of merchandise from Van Industries. Their terms to me were $215 net 30. So let's say that I sell high-end watches and clockware and clock components. Van Industries is one of my vendors. They sold me some inventory. I told them I would pay them later, and here's my terms. So which journal do I put that purchase of $43,600 in? And my choices are the journals that we just made, right? So choose which one you think is where we're going to record that. And hopefully you chose the purchases journal, because that's exactly what it's for. It's for purchases of inventory on account. So I'm going to go back now. Again, I'm on page 280 and input my data. So this happened on March 1st. Again, we're going to need to enter this in the accounts payable subsidiary ledger. So the name of the vendor, where I'm going to enter this for their AP subsidiary, was Van Industries. The invoice date was 3/1. The terms are a 2% discount if I pay within 2 days or 15 days, but in any situation, I have to pay within 30. I don't do anything here until I post, and I'm going to post to the accounts payable subsidiary ledger the individual amounts, and then the big total from this column to the accounts payable account in the general ledger. So I owe them $43,600, and my debit to inventory was $43,600. And that's how I record that first entry. Now let's go read the second transaction and try and figure out which journal we take it to. It says on March 2nd, now I've got some inventory. I've got these, let's say these high-end watches. And now I sold some of these watches on credit to Min Cho. And I issued invoice number 854. And the amount that I invoiced the company was $16,800. And that was the retail price. And the amount of inventory, how much I paid for the inventory, was $8,400. So the difference between the 16,800 and the 8,400 is my gross profit. So I sold merchandise on credit. So again, the first thing that we have to do is figure out which of our journals do we use. And hopefully that will be fairly self-evident. I don't need this last one. Sales journal, cash receipts, cash payments, or purchases. Which one am I going to record this on? I'm almost done. Yep. And so the answer is the sales journal, right? Because that's what it's set up to do. So let's go ahead and enter that transaction. So it looks like I sold it on March 2nd. I know that I need to take this data to my subsidiary ledger. So the name of the client was Min Cho, was invoice number 854. I'm not going to do anything with the posting reference, but I am going to use the column debit AR credit sales for the amount that I invoiced her, which was 16,800. And also I know whenever I make a sale of merchandise, I have to immediately remove it from inventory and debit COGS. And that was for $8,400. And the last one we're going to practice today is on the 6th. And then we're going to do a bunch of these on the next lecture that's taped. So on the 6th, I borrowed $82,000 of cash. Sorry, I'm trying to get this to focus. There we go. I'm on March 6th. I borrowed 82 grand from Federal Bank by signing a long-term note payable. So again, the first thing I have to do is figure out which of the journals I think it's going to go in. Is it going to go in purchases, sales, cash receipts, cash payments, or general? And I'm pretty sure that this one is going to go into my cash receipts because I'm getting cash, right? I borrowed a bunch of cash. So let's go ahead and enter that in here. And again, this was on March 6th. And the account, so let's go over here and make my debit. I'm borrowing $82,000. You know that if you're using this journal, you've got to be in that column. So what am I crediting? If I'm debiting AR, I'm going to credit notes payable because I now owe $82,000. So this is obviously, I told you earlier, you're either going to have the name of a subsidiary ledger account from your AR or an account from the general ledger. And in this case, and it's an account from the general ledger. And so you've got to use the column called other accounts. So then I look, do I have my debits equal my credits? And they do. My explanation is simply borrowing money. And of course, I'm not going to do anything with the posting reference until I post it to the general ledger. So again, I hope that this was helpful. I know that it's kind of tedious to make all these by hand, but it's honestly the best way to do that. So we will meet up with these same journals and continue working on those. We'll do a review of the subsidiary ledger and control account, and I will see you at the next lecture covering this. Thanks a lot for your work. Bye.